Under Scope Ratings 2026 Economic Outlook, we see medium-run risks for the global economy and for global credit remaining tilted on the downside. We outline several core themes on this slide. Starting with the top left theme, firstly, the global economy has remained highly resilient, and we expect this to continue. Nevertheless, there are increasing risks for the global recovery as the recovery soon enters its seventh year. Moving to the right, secondly, corrections are anticipated within the rising capital markets as the pricing of multiple asset classes appears comparatively rich. While financial system risks prevail, given elevated leverage within the non-bank financial intermediation sector, such as within private credit, alongside within less regulated artificial intelligence and cryptocurrency sectors. Renewed financial deregulation is also a concern. Thirdly, trade-related sovereign debt and geopolitical uncertainties remain important. Even if trade-related risks may have comparatively lessened compared against the spring of this year. Trade-related risks and volatility can re-escalate. Governments must contend against rising public debt, whereas an increasingly multipolar globe sees greater geopolitical uncertainty. Fourthly, steady-state rates are seen remaining higher for longer, as policy rates and long-end borrowing rates remain above their pre-pandemic levels, even after rate cut cycles conclude. Fifthly, labor markets within advanced economies remain historically strong, such as within the euro area, although select labor markets, such as those of the United Kingdom and the US, have recently softened. Finally, inflation remains a theme globally, even as risks from inflation for the euro area have recently become more balanced.
As we conclude 2025, we slightly revised up our global growth estimate for this year to 3.3%. We expect 3.2% global growth for 2026, as shown by the orange line in this diagram. Global growth has been resilient, consistent with our expectations, although the risks for the durability of the cycle are increasing. In Europe, growth for the Euro area 21 in the blue columns of the diagram remains moderate and is expected at 1.4% for next year after 1.5% this year. A pickup within the German economy should result in about 1% growth in 2026 as defense spending and investment increase. Similarly, modest growth is expected in France's economy, also amounting to 1% for 2026. The European economy continues to be supported by a strong recovery across much of the euro area periphery. At the same time, China's economic growth in the yellow columns should meet an official target of 5% for this year, and we expect resilient growth of 4.7% for China next year. The recent US policies of pro-cyclical tax cuts, rate reductions, and deregulation may bolster near-term growth globally, but risk widening longer-run economic imbalances. The higher trade barriers and geopolitical uncertainties hold back the global economy. Outlooks for scope credit sectors vary considerably entering 2026, from negative for the sovereign debt sector to balanced for financial institutions to mostly positive for subsectors of structured finance.